Welcome back. Nigerian stocks performed well on Monday with the Nigerian All Share Index, that's the NGX All Share Index. It rose by about 38 basis points to settle at 52,369.13, as you can see right here on the board. And this higher trend was ascribed to significant increases in MTN Nigeria as well as banking stocks on Monday. As a result, the market capitalization climbed by about 10 billion naira to close at 28.52 trillion naira, while the year-to-date return increased to about 2.18%. Meanwhile, today is Tuesday. The Central Bank of Nigeria's Monetary Policy Committee meeting is expected to issue an interest rate decision tomorrow after beginning its third meeting of the year today. Now, just hold on for a second and let me, we're in May. Yes, this is the month of May. The MPC meets 6 times a year, like I always say on this show. They met in January. They did meet in March. This is the third meeting of the year. The fourth meeting will be in July, the fifth will be in September, and the last meeting of this year will be in November. Now, let's continue. As in previous meetings this year, the committee is confronted with a choice of maintaining its hiking cycle or maintaining policy parameters unaltered. At the last MPC meeting, the MPC voted 10-1 at the end of the March meeting to raise benchmark rate by 50 basis points to about 18%. So the MPC is entering this meeting with 18% interest rate, which in March was the 6th increase in the previous 12 months. However, economic experts contend that managing Nigeria's inflation rate will necessitate steps other than tightening the MPR. And let me just say something there a bit. Of course, the MBS released inflation numbers for the month of April, and the inflation was printed at 22.22%, rising from about 22.05%. Yes, this is 0.5%. Yes, just a few percentage points over 22%, but now it's at 22.22%. So the MPC will really be between the devil and the deep blue sea, bearing in mind should it raise interest rate again. But if we take a look at the trend from January and March, the central bank governor at the end of the previous MPC meetings have always maintained that they will be slightly hawkish. So will that mean at the end of the meeting tomorrow, at the briefing, would we expect another announcement of interest rate hike? But we'll keep our fingers crossed to see that. Now, let's quickly move ahead. In anticipation of the FAC inflows expected later this week, we saw that interbank rates opened lower on Monday with the open buyback rate, which is the OBB, and the overnight rate both fell by about 200 basis points to close at 12.8% and 13.63%. respectively. Analysts are expecting that rates should fall further today. While interest was weighted to the short end of the curve, the Treasury bills market saw buying activity yesterday. Market participants anticipate cautious activity today as they prepare for the NTB auction on Wednesday. Now, for the bond market, it was quiet. Week open with little demand noted at the short end of the curve. The tranquil mode is still anticipated for today's session. Now, if we take a look at the Eurobonds market, despite the ongoing U.S. debt ceiling negotiations and Nigeria's high debt servicing to revenue ratio, the federal government Eurobonds market saw increased demand across the yield curve. And as a result, the average benchmark yield fell 15 basis points, ending at 12.45%. Now, let's take a look at the Naira and see how the Naira performed yesterday. I will say that it rose by about close to half of 1% to 463 Naira to 1 US dollar at the I and E window. We saw the Naira, it weakened last week, but we've also seen it appreciating a bit. But for the street market, or what we also call the parallel market, the Naira is trading at over 700 Naira. That is one hydra-headed challenge that the Central Bank of Nigeria has not been able to fix. Of course, in the past few years, it's tried to do that, to be able to harmonize the price, the exchange rate, or take some steps or take some steps in terms of policies to bring in FX into the market. It came up with the RX 200 billion dollars. A summit was held, I think, last week. It also came up with the Naira for Dollar scheme, all this in a bid to shore up FX inflow into the country, but Naira is still suffering from that crisis of having the official window and the parallel market at over 700 Naira. But let's quickly move over to the United States, shall we, guys? What am I seeing here? Our Nigerian market. Okay, thank you guys for bringing that up before we go over to the US. Okay, dividends update. For those of you that are invested in the Nigerian stock market, many companies have been releasing their earnings, and once you get to see earnings for those companies that have made so much profit, they will declare dividends to their shareholders. So some have started declaring, some have actually declared, some have started paying too. So you've got to take note of that. Okay, let me start from the bottom. Wema Bank, 30 kobo total dividend. They have what they call interim dividend and final dividend. Some companies pay interim dividend, like after the first 6 months, they pay interim dividend. And after the full year, they now pay what they call final dividend. So the interim plus final is what we call the total dividend. So that's total dividend, the Wema Bank. Access Bank Holdings, 1 Naira 50 kobo total dividend. Fidelity Bank, 50 kobo total dividend. Airtel Africa, 0.003 US dollars. That's for Airtel Africa. Seplat Energy, about 0.03 US dollars. Therefore, dividend. Jais Bank, 5 kobo total dividends. Multiverse Mining and Explorative PLC, 5 kobo. GT Holdings, 3 Naira 10 kobo total dividend. There are still so many companies that we're tracking for you in terms of payment of dividends, so you'll get to see them time to time here on the program. Now let's quickly move over to the US, shall we, guys? Taking a look at the US stock futures. Okay, just before I even go to US stock futures, Ghana, the Bank of Ghana, the Central Bank of Ghana, yesterday kept policy rate unchanged at about 29.5%, if I'm not mistaken. That's their MPC after their Monetary Policy Committee meeting. The Bank of Ghana, which is the Central Bank of Ghana, kept interest rates unchanged at 29.5%. We'll be expecting as at the end of the meeting tomorrow. What else is interesting around Africa today? Okay, so red numbers, as you can see. Now, let's quickly move ahead, guys. For the United States, U.S. stock futures this morning mixed on U.S. debt ceiling negotiations. We also saw that European stocks are lower as U.S. debt ceiling deal still pending. Yesterday, U.S. President Joe Biden, as well as the Speaker of the House, did meet. The Speaker of the House at the end of the meeting said it was positive, but no deal reached yet. For European markets, like I mentioned earlier, a bit missed. Now let's quickly move over to Asia, where it was also mixed. Japanese stocks are recovering after, Japanese stocks, yes. We're seeing Japanese stocks snap 7-day winning streak. Hong Kong stocks dropped to a 2-month low today, while all prices are trading on tighter supply. Brent crude is trading around 75 US dollars a barrel, while gold is doing about 1,959 US dollars an ounce. And that's it for the markets. Let's quickly take a break. My guest will be joining me after the break. The immediate past chairman of the Chartered Institute of Stock Brokers, Olatunde Amolegbe, will be joining me to talk about markets and the transition. Let's try to make sense of all this, what will I call it? All these technical grammar, market figures, market numbers that you get to hear me say. Don't tune off to say, oh, I don't understand what Nancy is going to say today, or I'm not invested in the stock market and all of that. No, that's actually not the basis of what that interview will be on. You've got to listen in so that you will know where you should put your money, especially as a new government comes. So for savvy investors, they watch programs like this, get insights from guests, and you will begin to allocate your money. So that's the essence of this. Let's quickly take a break. We'll be right back.